Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Mitch Berlin, America's Vice Chair, Strategy and Transactions at EY, to discuss CEOs and deal-making strategies and the sectors to watch for 2024 M&A activity. Mitch, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. Thanks for having me back.
You got it. And when you joined us around this time last year, you discussed a 2023 M&A slowdown companies were anticipating. Now that we're only just days away from closing out the calendar year, how would you summarize this year's M&A activity?
Well, we'll end this year probably 34% below where we were in 2022. And keep in mind that 2022 was down about 40% from the prior year. So significantly down from the heyday of 2021. And if you look at total volume of significant deals, those above 100 million, we'll end up basically resetting to 2019 numbers, about 1,250 deals above 100 billion for this year, similar to 2019. So a reset of M&A markets.
So if you're expecting M&A to turn around in 2024, can you talk a little bit more about that and what may drive M&A activity in the next year?
Sure, a couple of reasons. One, a big factor of that will be the loosening of the Fed nominal rate. And so the Fed announced that they're expecting to reduce the nominal borrowing rate about three times in 2024. So that should have a significant impact on the cost of capital. So we'll see more people enter the market. They'll also start entering it now knowing that they can refinance at a lower rate going forward and average out at a favorable interest rate. So that's a big driver of deal activity. Two, we've seen a pickup in the last month or two in sell side activity around private equity, and where there's sell side, buy side soon to follow. So that's a good leading indicator. Three, we expect that people will try to advance their technology platforms through acquisition versus through building it internally. So companies still need to transform, and the fastest way to transform is really through a transaction and M&A.
Mm-hmm. How are executives responding to this? What do you think it means for them?
Well, I think that look, they definitely need to continue to be on top of their game, particularly as it relates to AI. AI is going to be probably the biggest disruptor in our lifetime. If you think, for example, that I think it took about 5 days for ChatGPT to get 1 million users, it took Instagram 2.5 months. So when you think of the rate of adoption of new technologies, these CEOs know that this is here, and they need to jump on board with it. And again, the fastest way to get advanced technologies is through acquisitions, because growing it internally, particularly if you're not a tech company, is very time consuming and very costly.
Mm-hmm. Has that sentiment shifted at all? How is that impacting deal making?
Well, it's shifted. There's definitely more confidence in U.S. companies around deal making. So we did a survey that closed in October, and almost not over 93% to be exact, of the participants said they're going to do some sort of transaction in 2024. So that can be a divestiture, an acquisition, or some sort of joint venture. But deal activity is definitely anticipated to pick up in 2024, and the CEOs are supporting that assertion.
Let's talk about the 2023 M&A activity report, naming technology as its M&A sector of the year. You had explained that, and energy as the sector to watch for 2024. Can you talk through how you chose each, and which other sectors are you looking at?
Yep. So if you look at technology, while down about 50% in deal volume year over year, was still the highest and the most active sector in 2023, with about 25% of deals being done in technology. And that's not just, again, technology buying technology, it's non-technology companies buying tech companies to advance their AI and cyber platforms. So that's why we named it the sector of the year. In 2024, we're looking at energy, particularly oil and gas, because the barrel of crude oil is still at a high level, and so oil companies are flushed with with very strong balance sheets, and so that allows them to enter the M&A market without necessarily having to go into the syndicated debt market to fund some of those deals. So that's why we think energy, specifically oil and gas, will be a significant player in 2024. And we've seen some big energy deals in 2023. So we're already starting to see a lot of that activity.
And I want to wrap up with generative AI for a moment here. How are the CEOs that you're working with prioritizing this technology now and into 2024? And how will this continue to impact deal making?
It's definitely top of their agenda. You know, ESG was a big agenda item for a few years ago. AI has trumped that just because of the quick adoption rates. So they know that they have to get there fast. We're seeing a lot of this in financial services that helps them to better manage risk. We're seeing a lot of AI adoption in healthcare to help improve the diagnostics process, and we're seeing a significant amount of AI and consumer and retail because AI allows these companies to have a more bespoke customer experience. So it's top of agenda for all CEOs across almost every sector.
All right, Mitch, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.